Hi everyone, Isaiah Riel, financial advisor with Laguna Wealth Advisors. Thank you for watching. Thank you for listening. Today I'm sharing with you the September 2018 market update. Hi everyone, welcome back. As I mentioned, today I'm sharing with you the 2018 September market update. Today I'm going to share with you how the markets here in America have performed so far this year, the best performing asset classes that Laguna Wealth Advisor has found so far this year, ranking the best asset classes around the world from best to worst, and sharing with you the market outlook. So let's get started. Market performance so far in 2018, from the beginning of the week, starting September 17th, S&P 500 has returned a 10.17% return. Dow Jones Industrial has given back a return of 7.59%, and the NASDAQ has given back a return of 18.87%. All three major indices have given a positive return so far this year, which is a great sign. Taking a quick step back, let's recap what's happened so far this year with the talking heads, the media, and the news. Trade war with China has happened. What's going to happen with the markets? Markets have been positive. Turmoil in DC, politicians can't agree, and of course everyone has their own opinion on that. Even with what the talking heads have been saying, what's happened? Markets have been positive. Europe, Brexit, what's going to happen there? What's going to happen with the countries in Europe? Markets have been positive here in America so far. Emerging markets, Venezuela, even Turkey, they're having some troubles. What's happening with the US stock markets? Markets have continued to be positive, which is a good sign. So even with the news out there, with the talking heads of the media, markets have been strong, markets have been positive, which is great news. In fact, we've been talking about that in previous videos. Market news. Markets continue to be positive so far this year. Top performing sectors that we have found here at Laguna Wealth Advisors to be top performing when it comes to the platforms that we use, including Dorsey Wright. In no specific order, I share with you these three. Technology. Technology continues to be a best performing area. That could be the big internet players, the Amazons, the Apples of the world, and of course the others out there. They've been very performing. Technology is always changing, technology is always evolving, and because of that, their stock prices have done very well so far this year. The second sector we want to talk about is software. So going a little bit more nitty-gritty into technology is software. That could be the Microsofts of the world, the Adobe systems, the Salesforces. That could also include cybersecurity companies. Software has done very well for clients, for us, and of course that could be an area that maybe you take a look at moving forward. The third that I want to share with you is healthcare. That can be healthcare providers, that can be biotechnology firms. They have done extremely well so far this year. You have a need for healthcare. I have a need for healthcare. The baby boomer generation is going to continue to have a need for healthcare moving forward. These areas are going to be in demand, so the healthcare providers and the biotechnology firms are going to be busy for quite some time. That's been a very good performing sector so far this year. Asset class ranking. So from the platforms that we use, we can see exactly what have been the best performing asset classes so far this year. I'm going to share them with you. Number one, domestic equities. That's stock markets here in America. We talked about them in the past. Even with all the news out there, with what's happening around the world and here in America, markets have given a positive return. They've been the best performing asset class for investors around the world. US domestic equities have been number one. Number two, international equities. Again, even with what's happening around the world, news-wise, what the talking heads are saying, international equities have been the second best performing asset class for investors so far this year. Number three is commodities. When we think of commodities, we think of gold, we think of silver. That also includes oil. Oil did very well earlier this year. That can also include the farming goods, the soybeans, the wheats, the crops of the world. Those are included in commodities. That has been the third best performing asset class so far this year. Number four is fixed income. Those are bonds. Floating rate bonds have been done very well so far this year. Short duration, ultra short duration bonds have done very well so far this year. Something to keep an eye out moving forward that I want to share with you is the correlation between duration and yield. Duration means the amount of time that you hold on to a bond. I mean, it could be 1 year, 5 years, 10 years, 25-year bonds. That's what we mean by that. The yield is the amount of return that you get. In the history, the duration, amount of time you hold the bond, has been lower than the amount of yield that you've got. which that's a good thing. Now that's starting to change a little bit now with these intermediate and long-term bonds. Something to keep an eye out moving forward. Number 5 is cash. Cash is cash. Checking accounts, savings accounts, cash and investment accounts. They may give you a couple pennies for holding your monies in there, but that's the 5th best performing area. Number 6, currency. Currency is in last place. I don't trade currency. Don't do it for my clients. Of course, I know there's savants out there that love to trade currency. We don't do it, but nonetheless, in the platform, it's been the last worst performing sector when it comes to asset classes. Market outlook. As I mentioned, markets continue to remain positive so far this year. We'll look to see them remain positive for the rest of the year, which is a good sign. GDP is strong, unemployment's low. These tax cuts are helping these companies right now. And what we're starting to share with clients, and also too want to share with you, is let's keep our eye out again for a market recession. We do anticipate a recession to come here. We say within probably the next 12 to 18 months. Again, could be sooner, could be later. This is just our thought, not a fact. But nonetheless, we just have to keep our minds out on it right now. Yes, markets continue to be positive and they continue to perform for investors, which is a great sign. But of course, as a financial advisor and as wealth advisors for our clients, just have to keep an eye out for them. Is that we're going to see a recession. Could be sooner rather than later, or it could be later. But nonetheless, have to think about it. And when it comes to recessions, a couple things that we can do. When that time does come, you can take the profits that you made here in the last 8 to 10 years of this bull run, take some of those profits, which is good for you. Another area that you can take a look at is when recessions come, there could be some areas in the markets that are discounted compared to what they have been in the years past. That could be a good time to put some of your cash to work if you have cash set aside. That's a thought for you. Of course, if you're working with a financial professional, talk to them first, see if that works for you. Or if you want to talk to me about it, I'm here to help you too as well. So my friends, that is the market update for September 2018. I want to share it with you. With any questions or any thoughts, please let me know. I look forward to talking to you soon. If you haven't followed us on our social media platforms yet, please do so. Look forward to talking to you soon, everyone. Thanks so much. Have a great day. Take care. Bye-bye.